Hi, welcome to this video today, which is on the 31st of March. It's Saturday. Going to be looking at two high odds trade setups and going to the charts in a moment. They're going to be GBPUSD and EURUSD. And we see potential moves of up to 500 pips in both pairs. And we believe it's going to be in favour of the USD. We'll explain our logic in a moment when we go and draw our levels on the charts. Now, in terms of just for new viewers, we use a very simple technical analysis, and we're only interested in big support and resistance levels that matter to key players in the markets. Now, to find those levels, we'll be using our favourite tool in Forex trading, the COT. If you have not heard of it, it's a great tool for alerting you to high odds entries. It tells you where the key players are in the market, and also helping you project how far a move might go, which you can't do just from pure technicals alone. Now, if you want to learn more about this tool, there is an explanatory video beneath this one. Just want to watch the video through right now. Just keep in mind that we always want to trade with smart money commercial hedgers when their positions diverge from speculators. Now, in terms of the charts, it's my view right now. You can see my daily technical analysis of these two pairs and 12 others by getting live access to our member center beneath this video. Right, let's go and look at GBPUSD first of all, and we're going to start with the COT net traders positions.
Start with the British pound against the USD. Just look at the COT net traders positions, and then we're going to switch to another chart and draw our levels. Now, what we're interested in on this chart is seeing what the smart money commercials in red are doing against large speculators. Now, in terms of this A point that I put, you can see speculators build up long positions. Commercials down here drop very short against them. And it's in this rise that speculators are really buying and commercials selling. Then it peaks in favour of the commercials. We come down. Now, in terms of our latest trade in the British pound, this point B is very interesting, because what you see effectively is when prices are just sort of moving sideways here a bit, speculators really lighten off their longs, okay? Commercials do the same with their shorts. But then when we accelerate up here, the specs step up their buying to the same level as A. The commercials step up their selling to the same level as A as well. So divergence is the same. And we see prices come off. Now, we expect prices to continue to the downside. We're going to see a major correction in the British pound, not just to this 138 level, but even lower. So let's go and draw some levels. Chart of GBP USD, just draw our levels in a moment. But first of all, very quickly, I just want to go through these GBP bullish fundamentals the speculators believe are in place. But the commercials have obviously taken the view that they've peaked. Now, you don't actually have to know the fundamentals, you can just trust the commercials, but we like to just see what the commercials might be seeing. And this is what I think they are seeing. Market discounting 2 rate hikes this year by the Bank of England, first in May. This is now discounted, okay? It's in the price. Will the Bank of England, though, hike in May? We don't think so. Bank of England very concerned. Wage growth below inflation, which means the consumer is under pressure. Consumer debt is high. Consumer spending, very important to the UK economy. The Bank of England won't want to put more pressure on the consumer unless they have to. They already believe inflation is peaking in the UK, so they might hold off. Okay, if they raise, it's in the price. If they hold off, then basically that will send the pound lower. Brexit negotiations as well. Market is discounting. They're all going to be plain sailing. But will they? Yeah, we've covered this length in the member centre. One major problem, the Irish border. That's going to be very difficult to solve. Any uncertainty over that will put pressure on sterling. On the other side, the USD is oversold on interest rate differentials, current and going forward. It's not getting worse for the USD. It'll also gain on risk off. Okay, so we've got the potential, we think, for good downside in the pound. Now, what interests us, as we saw from the COT, was this big rally up here, okay? And specs have a big net long position, commercials against them. Prices come down, then the specs drive the price back up again, reach a similar level of buying to over here, yet they can't take out this double top. Okay, so from our perspective in the member centre, we just sell back through the round number at 141.70. We're now at 140.28. So it's a minor profit, about 140 pips so far, but we're expecting or hoping for more. Just draw a trajectory line there. I think any rallies will fade back to these two bodies and a diagonal trend line. So we're not going to go through 142 in our view. Our stop at present is 142.55. Now, the level is really interesting. For fresh positions, you could obviously sell the rally, but a break lower looks a high odds entry, okay? And it's a round number, it's 140. And what you can see is here, you've got some tails, okay? Drift back, then we get through the level, hold it, push off with a big blue. This is the peaking of the spec buying. We're drifting back to the level. I personally think coming through the level, break lower through 140, just get well clear of the round number, say 139.70, and then see if she runs. Now, if we get below 139.70, close below that, and we'll bring our stop down. We don't need to keep it back where we've got it at the moment. Yeah, the break lower will confirm more weakness. I'll do the target in a moment. Now, my own view would be stop would need to be back here, okay, on a break lower. So you've got those two bodies there and this tail here that tries to get back above, okay? You've really got the 141 level there, so I'd be one level back from that, probably about 141.55. We'll look at it obviously on Monday, but break lower, where could we go? Well, the obvious level is going to be here. Sorry, if I could get my line in. You've got obviously supported another round number at 138, but because the specs, you know, in historical terms in the COT are so long of sterling, I'd expect their stops to be hit 138 to get run, and we'll go to major support, which is a weekly level as well, 136. Okay, I actually think we could run on to 133, but I think 136 is on the cards. Okay, and if you look at it from a risk-reward stance, it's over 3 to 1. It looks a good trade on a break lower. Like I said, you can sell move higher if you wish, but yeah, breaking lower below that 20-day move-in average as well. The 140 level decisively taken out. I think we are going lower, so I quite like the look of this trade. We'll see how it goes. Now let's go and have a look at Euro USD, and we are going to look at the COT net traders positions first. Right, we're on the Euro USD just quickly to look at the COT net traders positions, and again there's two divergences we're looking at. This one here is a historical net long position held by speculators. Commercials build up a historical net short position down here. What you see is the acceleration of price into this area here. Can't get through and down, okay? Specs drop off a bit, okay, when we're down here. Then here they go back to historical net long position, try and force the price up through this level here, come back down, okay? Now, the commercials obviously still heavily short against them, but they build up that second, historical speculative extreme. In terms of what it's telling us is that basically the euro is at a bullish extreme. The speculators, there's now not enough buying to take out resistance, and we should see a correction. And in our view, it's going to be a big correction. So let's go and draw some levels. Right, on the chart of Euro USD, we'll draw our levels in a moment. But in terms of the fundamentals, we think the Euro bullish fundamentals are peaking. We think that's what the commercials are seeing. So just going to quickly go through what I think the commercials are seeing, the specs aren't. Market view, stimulus to be wound down in September, rate hike by December. That is not going to happen. There's a problem. Inflation not rising in Eurozone quickly enough. And the ECB have said stimulus, reduction, rate hikes are dependent on inflation. Last figures for the zone came in at 1.2% overall, okay, below forecast. ECB have got a target of 2%. It's a long way away. Latest inflation at the zone, from the key country in the zone, German inflation, it fell last week, below market expectations. So the ECB are going to be cautious. They've said this, from the head of the ECB, Mario Draghi, to other notable council members like Noteworthy. So, they're just not going to be winding down stimulus as quickly as the market expects. And they've told the market this, but the market still believes that they will. Now, if I just draw a level here at 125, we know from looking at the COT, this big rise up here, speculative net long position, can't take out 125. We drop back, shallower rally, down. This rally here, again, on a historical net long speculative position, but it can't get through 125. The specs now are running out of buying power. And we now think that basically we are going to be going to the downside. Now, we've actually taken a short through 123.70, but as I've stressed in the memo, so it's only a half size trade, okay? And I'll explain why in a moment. We think, the euro is going down. So we now think, I'll draw a trajectory line in, we should really fade back to this level here, okay? Got to stop back behind this level. But what we're looking for here is, we haven't really moved down much from our entry. We're looking to get down to 122. This is where we want to double up our position because it's a key level. It's the bottom of the recent channel, okay? And what you've got here effectively is the bullish fundamentals are exhausted. We're losing upside momentum. Want this level to crack now. Once this level cracks, then you've got a lot of specs to be taken on stop. So where could we go to? My own view is 119.30. That's the first level. Okay. Second level is all the way back to 116. Okay. Now, obviously, as we come down to the breakout point, we'll be looking at our stop levels, but it's probably going to be back behind 123. But obviously, we'll see how it goes. Now, for us at the moment, the euro is kind of losing upside momentum, but it hasn't yet confirmed a decisive trend change. We think, obviously, it will do because of the way the COT lines up. But I'm looking for this pair to do what Euro JPY did. Euro JPY did similar. It took a little while to break, and then it broke down heavily by over 500 pips. So I'm hoping that this one is going to do something similar. So we shall see. With Euro USD, I've often said it, I don't trade it that often, okay, myself, because I always think, not too much volatility. Very often there's better opportunities elsewhere. But I think we are now going to get a really good opportunity in this pair. So you can sell the rallies if you want, but watch that 122 level closely, because if that gives way, I personally think we're going to see a bear trend develop. Just my view, of course, as per usual. Thank you very much for watching me. Take care and have a good day.